Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Andrea Guerzoni, Global Vice Chair, Strategy and Transactions with EY, to discuss EY's first quarter 2023 CEO Outlook Survey, exploring what is top of mind for global CEOs as they look to protect and grow their businesses in 2023. Andrea, it's great to see you again. Welcome back to Trade Talks.
Thank you, Jill. A pleasure.
You got it. And despite a volatile end to 2022, the IMF recently raised its global growth expectations with an expected economic rebound as soon as 2024. What are you hearing from global CEOs in regard to their sentiment around an economic recovery?
Jill, there's still a lot of uncertainty. It's fair to say that the environment looks pretty much the same as it was a couple of months ago. I mean, there are some signs of recovery. I think there are some good news in terms of the depth of the recession. I think there's also good news in terms of certain stabilization for inflation and interest rates. But I think the geopolitical tensions and the kind of volatility in the markets remain. So I think it's still a very uncertain environment.
What are some of the main challenges that CEOs are facing as they manage market volatility and macroeconomic uncertainty? In other words, what areas are they investing in to recession-proof their companies and weather this uncertainty?
I mean, in these environments, I mean, first and foremost is really controlling costs and ensuring resilience. So they are really investing and optimizing their portfolio, ensuring that they allocate the capital best that they can, and resilience in terms of really redesigning their supply chains to ensure that they can actually provide the products they want the moment they want at a reasonable cost, despite the geopolitical tensions and the difficulties really in providing certain goods. So I think overall, I think there's a focus on cost, but at the same time, I think there's also focus on long-term value creation, which is really about ESG, technology, and talent.
The last time we spoke, we discussed the continued decrease in mega deals due to declines in valuations and regulatory concerns. Did this trend continue in the second half of 2022 and will it continue into 2023? What's the overall sentiment around M&A among CEOs given the challenging macroeconomic environment?
Quite paradoxically, the sentiment remains quite robust. I mean, our survey provided a very strong appetite for, in general, transaction. 9 out of 10 of the CEOs actually responded that they are contemplating a transaction, some sort of transaction in the next 12 months, being an M&A, a disposal, a joint venture, or something like this. So M&A remains very high on top of the board's agenda. But at the same time, yes, I think the trend towards smaller, less complicated, related to countries, geographies that are less risky, this remains. So size, friendshoring remains really main trends also for this financial year.
The EY 2023 M&A outlook points to the fact that regardless of a decline in M&A transactions in the fourth quarter of 2022, deal value was still up 67% compared to the lows in deal making seen in the post-Great Financial Crisis period. What factors drove the M&A slowdown in the second half, and what's your outlook for deal volume in Q1 and beyond for CEOs who are actively pursuing M&A transactions? Where are they investing their capital?
I think it's mainly the result of the factors I mentioned before. I think it's really the cost of capital, the uncertainty regarding growth, the possibility of having a global recession, geopolitical risk. All these factors play against the M&A, against risk. I think these trends continue through this couple of months in 23, and we don't expect a major change until the second half of this financial year, where probably we will see more tailwinds and we will be a reduction in the level of uncertainty, which could lead to an uptick in M&A activity. Overall, the situation, as you said, is not as dire as it was after the global financial crisis. The deal activity continues, in particular in certain sectors. Tech continue to remain extremely active, consumer product, retail. If you look at oil and gas, energy, renewables, all these sectors remain very active. The focus is really trying to foster growth, acquire IP, tech, talent through acquisition, and obviously trying to optimize the capital allocation, as I said before. So disposals can become very opportunistic target for private equity. We actually are looking into assets that can be bought at a reasonable price and can be actually turned around and maybe alongside other similar assets, they can build better value creation stories.
Let's talk more about the private market. As we're seeing a reset of valuations and a continued rise in interest rates, how will this impact private capital's role in corporate deal making?
I think private capital has been very quiet over the last 5-6 months. I think the second half last year and also the beginning of this year, really the increased cost of capital and the volatility in valuation, I mean, is really impacting the M&A activity in private equity, but there's a huge amount of dry power. And what we see, I mean, looking at the pipelines of our private equity clients, they are building fantastic opportunities. So we do expect a sort of comeback during the next couple of quarters in this financial year.
And finally, Andrea, amid ongoing geopolitical challenges, how are CEOs adapting their strategies specifically around M&A? You had mentioned friendshoring before. Are there any other trends that stuck out to you in the report?
Yeah, I mean, it's obvious that as I mentioned before, I mean, the redesign of the supply chains remains a very important theme, ensuring really the resilience and the manufacturing activities is very important, and also the build-up of capabilities in markets where the geopolitical tensions are not going to be so severe. So the expansions in market where actually this could remain a growth story. So these are really the main trends alongside, as I said, the relative size of the deals below the radar of regulators and actually the possibility to work in environments that are less hostile from a geopolitical perspective.
All right, Andrea, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Always a pleasure.